Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today, very, very special guest, Mr. Dan Ives from Wedbush Securities. Dan, thank you for being here. We're so thrilled beyond thrilled that you're here. Special shout out to Mr. Greg Wong, who made this connection, who's on our advisory board for the Investment Institute, and to Mr. Russ Ramsey. Long ago, the three of you were at FBR. That is the connecting fabric here. So we're like, to the moon here with this setup. And so we're so happy that you're here. Maybe for those living under a stone that watch our show, which may be very few, maybe a brief introduction for yourself.
Yeah, and Greg and Russ are both goats. Look, so I for 25 years I've covered tech stocks on Wall Street, and that it started off at FBR, and then I've been at Wedbush for almost 7 years. And look, I think many people know me as really identifying technology trends and winners where maybe others didn't see it. And I think in this environment, and even really over the last few decades, the best opportunities sometimes have been there.
Yeah.
But at the time, it didn't seem like it.
Right.
And that's sort of how we build a reputation, hand-holding investors globally throughout tech. You call me perma-bullish, but I believe, we were still in really what's essentially year 3 when it comes to AI of what's going to be an 8 to 10 year build out.
Perfect. So let's jump right into AI. And so one of the largest holdings, or actually the largest holding for the Investment Institute student funds, is Nvidia. And I know a name that you talk a lot about. And the market has been pulling back for sure here over the last couple of weeks, and a lot of different reasons that may be the case. But what's your outlook for Nvidia from here? Lots of people obviously have very specific views on where they are. They just had their GTC conference out in California, and I think you get these divergent views. Some people think like, okay, well, maybe that run has happened and they're overbought, and this pullback is deserved, and maybe that's what should happen. But if you sort of read into what Jensen Huang was saying, this seems to be, to your point on the AI front, just getting started.
Yeah, look, this is an AI revolution, and it starts with the godfather of AI, Jensen Nvidia. And I think what you've seen play out is the foundation. There's only one red phone to get those chips, and it's Nvidia. And
right.
Despite what some of the DeepSeek and other issues that we could talk about, the reality is that we're in a $2 trillion AI capex over the next 3 years. Nvidia, it's really their world, everyone else paying rent in terms of the chips, but It starts to what is a fourth industrial revolution. And I believe this is a stock that ultimately is going to have a 2 in front of it. We believe it's a $4 trillion market cap, and ultimately will be $5 trillion over the coming years when you think about physical AI, autonomous robotics. But look, the haters hate. And the reality is that if you focus just on valuation, you've missed every transformational tech stock the last 20 years. For Nvidia, I could argue it's cheap relative to basically trading mid-20s on a PE basis perspective. And I think this sell-off here, in my view, it's sort of been a generational buying opportunity.
Excellent. And we're on the same page for our student funds. We're certainly very optimistic about the future of AI and to us. And maybe you could comment on this. And you basically said it. Everybody else is paying rent. But could you maybe speak a little bit more about, to us, right? Nvidia's in that pole position, and you see what second place is. AMD, others seem to be way distant second. Maybe you could mention a little bit about the competition, at least in the short and medium term, doesn't seem to be a reality.
Yeah, well, look, it's not. It's essentially not a reality for the next 2-3 years when it comes to the AI chips. Look, Nvidia, when you look at Blackwell, they're essentially sold out throughout 2025. You look at Rubin next year,
right?
And I think that's something that you'll start to see that get sold out. As we ultimately get into orders. I think when you look at names like Broadcom, that probably is the best way. What I view as a secondary way to play in terms of ASICs and just my view of where training and inference are going. AMD, look, obviously a lot of optimism that they were going to get there, and they will. Like, look, Lisa Su, in my opinion, is one of the best CEOs out there.
Yeah,
but Nvidia and Jensen were years ahead of anyone else. So it's going to take a very long time for anyone, even again to that 5, 8, 10% market share. And then you look at names like Intel, basically run like a municipal government, right? That's one where that's sort of been an epic disaster.
Yes.
And it just shows where Nvidia is going to continue to dominate. And that's why I believe this is one, any sell-off in Nvidia, you own it because of my view of where this is all heading.
Right. And maybe also comment on sort of this ecosystem. I think a lot of people that maybe don't know as much about NVIDIA, certainly as you do, the CUDA, the software piece of this. And could you maybe talk about how that sort of extends their dominance in this system where they really are building an ecosystem and have built, whereas others, including AMD, are not quite in the same realm.
Yeah, it's a great point. I mean, and I think in GTC really lay it out because when you think about the chip as really the foundation to AI use cases, look, you only have 4% enterprise in the world that have even started AI, none in Europe, none really in Asia outside China. So we were just so early days. But when you look at the next layer, you talk about CUDA, you talk about the software layer, there's really an arms race going on around tech in terms of big tech, whether it's Amazon, whether it's Microsoft, Alphabet. What Jensen and NVIDIA are doing is they're just expanding more and more of that end-to-end platform. Now, the golden goose, what they're really going after is physical AI.
Right.
When it comes to autonomous robotics. That to me is really what probably going to be the biggest opportunity when it comes to actual AI. But you're seeing this all play out in front of us in terms of this, who's going to own the software layer, who's going to own the chip, and NVIDIA, because they're so far out, they're going to continue to just further and further expand that moat.
And I want to move on to some other names, but before we move on to any other names, could you maybe, when we talk about management, when we talk about the investment institute, where what we train our students is business management, price valuation, and balance sheet, and you talked about the valuation a little bit on Nvidia, but maybe talk about Jensen Huang a little bit. As you mentioned, godfather of AI. Could you maybe just give your views on sort of how effective he is as a CEO?
The Mount Rushmore. I mean, look, I've done this and met thousands and thousands of companies, and I mean, Jensen, you're talking about a rare breed in terms of what he's done. He has the vision, the understanding. He's someone at 3 a.m. will send emails. Look, I think it speaks to our view. Never overestimate how good a management team could be and how important, and never underestimate just how bad a management team could be.
Right.
And I think this is a good example because leaders lead. And ultimately, we're not talking about AI. We're not talking about Jensen's black leather jacket. If it's really not for that original vision, go back 2022. Investors, vast majority, why are you spending on AI? You're a gaming chip company.
Right.
But he had the vision.
Yeah.
That's what Cooks has, Nadella, Musk, Karp, and it continues. And that's why I think when you look at the companies, you cannot, what I believe is really like, just brush aside who's running it.
Right.
I think that's a huge sort of core of the hearts and lungs.
Thank you. And you mentioned the next name we want to get to, which is Musk, some of the names you want to get to. And so I saw you posted on X about Musk organized this all hands meeting to talk about, sort of what's going on at Tesla. And there's obviously a lot in the news right now. Maybe share your views on where you think Tesla, it's obviously pulled way back, I think almost 50% from its high, I think right after the election. Talk about, your view of where Tesla is right now. Do you think this is a short-term phenomenon? Do you think this is a bump in the road as far as, people being concerned about the price of the stock? Or do you think this is the same as Nvidia, this pullback is another buying opportunity?
Yeah. I mean, obviously, much different situation there in terms of with Musk and Doge, and obviously Trump administration, some of the brand issues. That's really become, where Tesla's become a political symbol, right? And that's something for a brand that's never a good thing. Now, again, Musk, knowing him from the beginning, he goes to be a different drum. He's not someone that's going to back down. And that's been part of the issue here is that you have to separate between near term and medium to long term. When I look at who are the best disruptive technology players over the next decade, it's Nvidia and Tesla. I mean, to me, Tesla, autonomous robotics will be multiples of the value of what the company is today. It's like that is really what they're going after. Now, in terms of brand worries and everything, like we've said, Musk definitely needs to better balance and needs to navigate. And I think last night was it was great to see that was a great first step in terms of what he did. But it doesn't change the true value of Tesla over the long. I mean, I believe autonomous itself is worth $1 trillion.
Right. Just the full self-driving piece.
Just full self. And I believe, but in the next 5-6 years, like I think 20% of vehicles is essentially going to be autonomous. My view is like if you have an 8-year-old, they're not really going to need a driver's license given where this is all going. But then it comes down to near term. Okay, how do you navigate it? 6 times you've had 50% sell-offs peak to trough in Tesla. I believe this is one. Like I think Tesla from here is, is a 2 to 3 bagger relative to where it goes over the coming years. I'm not saying it can't go lower.
Right.
But if you look at the market opportunity and where they're going to go, many times I've been there with Musk and say, it's done. He's over. But again, for someone that I'd argue is a modern day Albert Einstein, they'll also navigate this crisis. And I think you'll see a more balanced Musk in terms of how he handles between Tesla CEO and Doge.
Yeah. Thanks for sharing that. And following up on this on Tesla, you mentioned the robotics piece of this, and
Optimus,
so Optimus is the the platform that they're building on. Could you maybe extend and describe for our viewers on YouTube and certainly on the podcast to talk about what do you think that market looks like and how long do you think that it takes to evolve?
Yeah, well, first of all, they have the production scale and scope that's unmatched, and that's very important because a lot of times there will be like great technologies, but you can't scale them. When you look at Tesla, when it comes to Optimus, I mean, I think we're talking what's ultimately going to be 150,000 robots being made per year coming out of the factories that we see in Fremont as well as in Austin. There's going to be the factory, or we'll say enterprise, where robots are obviously going to be hugely deployed, but a lot of it's going to be on the consumer side in households. And remember, these are essentially AI brains, AI chips, where they're going to start to know more and more those functions and those people. And that's why when it comes to, I talk about physical AI, autonomous and robotics, that is the holy grail of AI. There's 2 companies that essentially will own that market. Nvidia, more from the chip side, and what I've used Tesla really when it comes to, when it comes on the consumer side. I do think autonomous will probably be more valuable than the whole thing because that ultimately is really, when it comes to AI, the most complex AI piece that I think they are on a fast track to accelerate.
Yeah, and maybe before we move on from Tesla, maybe just talk about this, similar to what we talked about with Nvidia. What do you think is the real competition for either FSD and sort of the Optimus platform?
Yeah. I mean, look, you have, especially in China, BYD and others where it's obviously very competitive, but it's all about scale. I mean, by next year, you'll have 10 million Teslas on the road. It's not about, when I say, I've never viewed Tesla as an automobile company, disruptive tech. And the reason I say that is that only 15% of Teslas is full self-driving. I think that gets to 50% in the next 2 to 3 years.
Okay.
But when it comes to autonomous, you're going to have competition. But let's say something, Waymo, I was in a Waymo in Scottsdale, one of the 4 cities. Waymos are $240,000 cars.
Yeah.
They're not scaling. Tesla's going to be able to make ultimately what I view as cyber cabs, robotaxis starting next year. We're starting, when you think about Austin in June, unsupervised FSD. It's already starting. And I just think it's one where Tesla is a name where, because of Musk and because, we'll call it one of the most emotional bull bear stories probably ever in the market. You have to separate from that to the pure technology. And that's, look, at the end of the day, you own names because of their technology lead and where you think it's going. And that's why we've always been bullish in Tesla.
Excellent. Well, I want to move on to another name. So another name that you called early and know well is Apple. And some of the criticism recently for Apple is like they're missing this AI boom and they're falling behind. What's your view on Apple? And I think everybody would agree that Tim Cook is doing a fabulous job, but maybe not for this, the AI piece.
Look, I think they play a different game. Now, look, I'm not saying from an innovation perspective, and that'll be like a huge part of the narrative, like they're done innovating, they've done. But the reality is that for them, it's really been about install base.
Right.
And if you go back to, now like what, 1.5 billion iPhones, 2.4 billion iOS devices, they could lose the first round, the second round, the third round. But if you win 4 through 12, you win the match.
Right.
And the point is, 25% of the world is going to access AI through an Apple device.
Right.
99%, 99.2% individuals, once they go Apple, they never leave. So it just speaks to my view where they will get this right in I think partially in iPhone 16, but especially iPhone 17 and so on. And I think services, what that ultimately is going to do, that's going to add 10 to 12 billion per year to services business. So I think Apple is one of those names. I'm not saying that they're not going through a transition of growth.
Yeah.
They are, but you have to be able to look past that to ultimately, just like enterprise AI is owned by Godfather of AI, Jensen Nvidia, consumer AI is owned by Cupertino. And that's something, as it plays out more and more, that's going to be huge to the stock. But it goes back to like 2007, they launch iPhone. It's only with AT&T. Year later, financial crisis hits. Everyone's like, that's it. BlackBerry, Palm, Nokia, like they're going to be the ones that it was a great year for Apple. That's it.
Right.
That you went from 20 million customers then, now 1.5 billion iPhones. I'm just saying sometimes it's very easy with these stocks when you go through some of these periods to get into a certain narrative, sell these stocks, think it's done.
Right.
But I think that has been the wrong move. And I think Apple's a name. You don't trade it, you own it.
Right. Well, that's been the case for us. That's been actually one of the our largest positions for our student funds, and we bought it basically in '05 and held on. That's the smartest thing that we did was not sell.
But again, as I always say, like the haters hate. They've hated NASDAQ from 2000 to 20,000.
Yeah.
Always waiting for a black swan event, and it's one where the reality is that tech innovation is going to continue to accelerate. And I think when you own the winners and you own the names that are driving that, those are ultimately investments that have been those have been the historical names to own, right? I mean, go back to Meta, $85, no one cares about. Late 2022, it's next thing you know, it's $600-700.
Right.
Now it's always easy when the stock's moving to then call, but I think in the best opportunities are when you go through those white knuckle moments. Those are the inflection points that have created the best opportunities.
And with Apple here, I also want to ask you about your views on the market in China and connected to maybe some of the other things. I know you travel all over the world and you see a lot of different stuff, and obviously that's great intelligence. What do you think about the current market in China for Apple specifically, or any thoughts generally about the market in China for tech?
No, and I know you were just in China as well, right?
I
So it's
was,
like,
yeah.
I mean, like, look, it's one, and I'm sure you've seen it yourself. It's like, look, Apple is the second biggest employer in China at peak iPhone season. So the view that Apple's going to get out of China,
Yeah.
move everything to the US, that's a fairy tale, Cinderella
Right.
Netflix
It
story
seems like
that'll
it.
never happen. Okay. And that's why a lot of times, even like when I'm here in DC and I'll meet with like people, congressmen, senators, like, we need to make iPhones here in the US. I'm like, look, if you like $3,500 iPhones,
Right.
we should
can
make
do
them.
it.
We can make them in New Jersey. If you like $1,000 ones, you keep making them in Taiwan. But look, China's it's the hearts and lungs of the growth story of Apple. It's 20% of demand when it comes to iPhones. Clearly, they've hit a soft patch. You've had success from Huawei and others, domestic players. But I believe you're now going to start to get into a growth cycle in China for Apple. And I just think it's one where Cook's 10% politician, 9% CEO.
Yep.
He's been able to navigate it. And to count Apple down in China is the wrong move.
Yeah. And sticking with China here, and you brought this up earlier, it's more connected to Nvidia, but certainly has impacts for the tech industry in DeepSeek. So when it came out,
Yep.
Everybody really, freaked out a little bit and thought, okay, this is going to change everything. It doesn't seem like it did. And you hear Jensen talk about it's good for Nvidia. It's just going to grow the market. What views do you have on the impact?
Well, look, first off, I think there's a better chance of me playing with Saquon for the Eagles than DeepSeek spending $6 million and not using next gen Nvidia hardware. So I think the reality is like, let's separate reality from the fairy tale. So the view that like a $6 million startup, a hedge fund guy somewhere in his basement creates something that's going to take
Right.
down U.S. infrastructure. That's something that's basically it's a fictional fairy tale
Right.
story. So let's just throw that out
Sure.
there.
But you are wearing some Eagles green.
I
Just so
am
you...
wearing some Eagles green, even though exactly even though being Giants fan, I am. But the reality is that DeepSeek, you probably add 2 commas to what they spend to the 6 million. That's more realistic.
Right.
And I think even when you've seen in terms of some of the arrests that we saw in Singapore, like that they were very, very likely using next gen Nvidia hardware. But that's why, like at scale,
Mm-hmm.
that's why big tech spent 325 billion
Right.
this year on capex, 100 billion increase. The view that like they're overspending cap, I strongly disagree from everything we see because you're essentially building out a new infrastructure. And that's why it's something where, as this all plays out, I think it's one where that's actually bullish for NVIDIA and for the AI revolution because the cheaper the models are, whether it's China, US, Australia, it doesn't matter.
Yeah.
Because you need the models to be cheaper to ultimately drive more and more infrastructure. GPUs will be used for use cases.
Yeah, and that seems to be the case. It seems like it's, maybe a false comparison to talk about one versus the other. It's really about the pie is going to keep growing, and right now Nvidia is going to keep servicing that pie, whether it's on the lower end or the higher end.
And then it's Nvidia, and then ultimately it's Broadcom. And then my view is like it spreads out, whether it's Qualcomm and other chip players. I think the view, look, that's also why, like in the geopolitical landscape with Trump and worries about export controls and tariffs and what does that mean with China, the view is that is that decoupling. It's China versus U.S. I mean, my view is like it's all a game of high stakes poker as it plays out, and I think if you play it thinking, okay, what's step 3, 4, 5, you're gonna realize that a lot of the tariffs, I think, barks worse than the bite. I think the export controls is going to be not as restrictive as maybe some of the fears are there. And I think eventually a deal gets done between US and China.
Yeah.
So I don't view it as a decouple market, but China is competitive. I mean, I think for the first time in 30 years, US is ahead of China when it comes to tech. But if you put China tech, MacGyver style, in a box with like 2 toothpicks and some, and basically a PC, they'll figure out a way
Right.
to create, obviously more and more infrastructure. But I don't view that as a bad thing. More and more innovation continues to be the way that's ultimately going to drive this. But if you look, that's also why like I'm bullish on names like Alibaba, even names like KWeb, ways to play China tech. But I don't view it as this sort of black swan event
Right.
for US tech.
Excellent. Well, and thanks for that. I think that's super helpful. As you mentioned, I was in China, and I fully agree here. We're 1 and 2 on the innovation front, and possibly right, we've pulled ahead in the, let's see, the immediate term from China on the new stuff. But it seems like it's us in China and then everybody else in the
Yep.
world. Do you think that there's any other spots in the world that are really relevant at this point for AI?
I mean, like, look, I'm definitely seeing, some shoots that could be positive coming out of France
Hmm.
on some of the startups, and they had an AI conference there a few months ago.
Oh, interesting.
But then again, Europe's very restrictive when it comes to data privacy, and that's a huge issue. I think you see a lot more appetite when it comes to AI in the Middle East, but a lot of those investments are going to come through US.
Hmm.
Some will come through China. But it's going to be U.S. and China. There's obviously a lot is coming out of Israel in terms of core AI technology. But look, we're early days. I mean, the point is like that's why I say like we're year 3 in what's going to be a 10-year build out, and I think that's what fuels this tech bull market. It continues to fuel it in terms of the actual spending.
Yeah, and to your point, it seems like, the answer to the question that who wants to fall behind on the AI, wave is none of the big players. And so they're going to keep spending money, to your point.
But it's an arms race. And then like when you think about big tech has 1.2 trillion and generates 385 billion a year in free cash flow. Now, even to some, like, so let's just go through like the dark sort of comparison, .com bubble to
Right.
now. They showed the Cisco chart, showed the Nvidia chart. Tech was trading what, 37 times revenues in early
Right.
2000.
Very
Okay,
different multiple than it is
now
for
tech's
Nvidia.
trading at 27 times earnings. When you look at who is ultimately, in terms of .com, who is building it out, startups, VC, upside down business models, who's building it? It's big tech.
Yeah.
So that's why I just think it, when you understand where the spending is, it is an arms race building it out. And that's why I continue to believe, like, the AI party, it's still 10 p.m. It was 9 p.m. and it goes to 4 a.m. Now, I'm not saying in that period, like, DJ stops playing music,
Right.
glass on the dance floor, cops come, you think cops come
Right.
to the party? And we're going through maybe some of those periods now, but I think tech makes new all-time highs in 2025.
Excellent. And moving on to another tech name, Microsoft. So you mentioned their CEO as well, and they're at the center of this as well. Obviously, they're
Hmm.
backing OpenAI and what's happening there. Give your thoughts on sort of Microsoft's position in this market, on specifically on AI.
I mean, it's central, right? I mean, in other words, like, we're not talking about AI if it's not for what Nadella and Microsoft have done with the relationship with OpenAI, and then ultimately it's in their core backyard on the enterprise side.
Hmm.
In other words, like, as more and more enterprise move to AI, it's going to go with Microsoft, and that's going to be a huge accelerant for Azure, for Copilot. You talk about end to end, like you talk about software for in terms of Nvidia. I think Microsoft's going to be the core beneficiary
Interesting.
when it comes to enterprise. But right now, I mean, the DC Uber's negative on Microsoft. So the point is, like, you're
Nice.
going through one of those periods where I get it. I think in large cap, that's probably the most oversold name that we see. And I think Nadella is another one, just like Jensen, just like Cook, just like Musk. I think he's able to see forest through the trees unlike anyone else.
And maybe to follow up on the piece around the enterprise, do you think the software is because of the installed base that they have, because so many people are using Office as an example?
And you're an enterprise shop. Like, if you're an enterprise shop and you're going AI, you're going Microsoft.
A known commodity for you.
And that's something where, look, those are some of the nuances, and that's actually why, like, Amazon and Google have chased Microsoft, relative to where they sit from, from a core
Yeah.
enterprise backyard perspective.
And then you mentioned those two names there. Could you talk about some of the names that you think are, kind of falling behind on this? Certainly of the Mag 7, you mentioned a couple here. Who do you think are the leaders? We've talked about that, but how would you kind of place Amazon, Google, Meta in this race?
Look, I mean, my view is, like, the reason we're bullish on all of them because I think in different ways they're all going to benefit. Like, I could argue, like, Alphabet, Google, they're going to benefit from digital advertising perspective, cloud. And you could even argue, like, a lot of the offshoots in terms of, disruptive tech and that ecosystem where Alphabet's going to win. Amazon clearly, not just on the e-commerce side, but I think AWS, that's going to be a huge accelerant. That maybe they were late to the game, but I think Jassy has a great game plan. I think you've seen a huge turnaround there.
Absolutely.
I think, look, when you say, like, who are, like, losers, I think names on the wrong side of this, it's names like Dell, Cisco, HP, the traditional sort of hardware play. I think they're on the wrong side of it. Then there's, like, names like UiPath, like some of these software names are almost getting disintermediated from AI. And I think, look, stronger and get stronger.
Yeah.
So that's going to continue to play out. But I think also when it comes to use cases, that's where names like Salesforce.com, the Messi of AI, Palantir, and others are going to continue to lead.
So I want to follow up on that name, Palantir. And you were early in on Palantir. Great call. Many great calls, but including this one. Maybe talk about your thoughts on Palantir. A lot of people, and maybe for the benefit of the people watching this show and listening, maybe give a little bit of a preview of what Palantir actually is, because a lot of people have heard that on the news. They obviously think it's an important company, but in your own words, as simple as possible, what does Palantir do, and why are you optimistic about their AI?
Look, Palantir and Alex Karp, start Palantir and the core fabric of it. It started off as really government. I mean, they were playing within three-letter agencies in
Hmm.
the U.S., Western governments. I mean, that was their core, Palantir. But essentially, when you look at it, like next gen data analytics, what I view as really core AI is the models they've built. Now, of course, being used in the defense side, then started
Right.
bring that into the enterprise, they hit gold. I mean, because that technology, you do about Nvidia, there's no one that's near Palantir when it comes to their core tech.
Interesting. Yeah.
So when you look at AIP and you look at software, they've now really starting to own the enterprise in terms of use cases.
Hmm.
And that's where like that's another one, like very similar as like Tesla, like haters, like Palantir, but that's how the stock went from basically bar mitzvah age to $100 in a year because they were able to ultimately be so massively successful when it came to the enterprise side. My view, I think it's $1 trillion market cap in the next 2 or 3 years. But it goes back to like, if you sit there, focus on valuation, you've missed every transformational tech stock the last 20 years. And that's why I would much rather own a Bugatti in the left lane in terms of tech going 90 miles an hour
Right.
than own value in a minivan in the right lane with a bumper sticker saying my kid was a third grade honor student.
That's following up on that, talking about somebody who is very colorful, Karp, the CEO
Hmm?
of Palantir. Maybe your views on Karp as a CEO of Palantir.
I mean, Carp, someone I've known a long time. I'm just a huge fan of him personally as well as professional. I think he's someone that he understands visionary where governments and enterprises are before they even know where they're going. I think he built the company. If you think about it, even when it came to AI, he was never focused on LM. He was never
Right.
focused on models. His view is all the data. And it actually, even when you think about things like DeepSeek, it's actually more supported that thesis.
Yeah.
And I think Carp's someone that is just, a lot of times, like when you look, whether it's Musk, Carp, and obviously there's a bunch of other, I say Jobs was like this in some ways. Sometimes like CEOs are obviously like misunderstood. There's huge views in them. There could be, negative views. I think sometimes it skews the view of the company. Palantir is one of the best disruptive technologies, not just in the US, but in the world. Carp is a huge part of that.
Okay. And as you mentioned, a solid management team is obviously critical to the success of any company. And again, this is one of the
Mm,
foundational pieces that we teach our students here at the GW and GW Investment
100%.
Institute. So thanks for saying that. So now I'm going to move on to a couple other things. So maybe let's broaden it out for the market. Like, what are your thoughts around transformational tech outside of AI? Do you think that there are other pieces of the tech market? You mentioned some people that are probably falling behind on this piece, but do you think that there are other places that you should be in tech?
I think cybersecurity, I mean, to me, cybersecurity is the table pounder sector. Because now obviously there's just acquisition with Wiz, for Google, 32 billion, but you still have less than 50% data on the cloud. As more and more data moves to the cloud, we think 80% next 2 years. That's going to be huge when it comes to cybersecurity. That's why names like Palo Alto, Zscaler, CrowdStrike, CyberArk, names like Checkpoint are core names that we're bullish on because we are in a golden age for cybersecurity.
Hmm.
So that and I could argue too, it's almost a defensive sector in tech.
Okay.
That's also a third derivative of the AI revolution. Because I think also you want to start to think about who are the second, third derivatives of AI.
So a company that we own, just to follow up on this, is CrowdStrike and one of our student funds. They obviously had a big hiccup, to say it nicely,
July
and
19th. Yeah.
yeah, connected to the airline industry and to all those sitting in Heathrow, not connected to this, but certainly sitting at an airport. It seems like they made their way through that. Does that say much about the management or just about the importance and scarcity? What is your view of how they were able to work their way through such
I,
a public, screw up?
that would be like a Harvard business case or whatever that they'll study for decades. I mean, if you think about it, like one of the best example, I mean, they went through a crisis that was global. And when you think about what happened to the stock and the view of what that was going to mean to CrowdStrike and competition, Sentinel One, they didn't lose one customer. So it's another example, and I know it's something that you probably, that you teach here at GW. It's like customers and install base, if you could keep customers when you go through things like this, that is the best sign of confidence you could ever get. And I think it's where CrowdStrike ultimately made a new all-time highs. I view that as like one of the best breed cybersecurity plays out there.
Excellent. Well, thanks. We're along that, so we're in agreement for sure. And I do think it's a good lesson, and we certainly try to instill this in our students,
Yeah.
is that understanding how a management team can navigate a crisis, and if the customers don't flee during that period, it obviously means there's a lot
And
there.
sometimes in the crisis, it's very easy to run for the hills. But the reality is that those actually create some of the best opportunities.
Excellent. So now, thanks again for being here. I want to maybe step back a little bit from the companies, and before we fully wrap up the show. Is as I mentioned here, this is our students manage, about $10 million. The market's pulled
Great.
back a little bit, but we're super proud of the performance from our students. And we're absolutely trying to get our students better opportunities to whether it's Wall Street or any financial services, or even more now tech and tech related things. And I know that you started an AI innovation center at Penn State. Congratulations. I think
Thanks.
that's great
Great.
work. What advice could you give to not just our students, but just students in general that are trying to get into financial services? What skill sets do you think, obviously AI is probably part of that, but what skills do you think that they should be learning while they're in school?
Look, I think AI is going to be more and more important in terms of like whether it's on sales and trading, whether it's on banking, research, quant. I think that's going to become more and more of a skill that you're going to need to in terms of that development tool, understanding code, how to build things like that. I think, and that's why it's a huge passion of mine to give students wherever they are the tools that they could ultimately accelerate themselves. And I think it's just look, I hear from students, obviously daily, around the world. I think part of it is like you have to understand like how you could differentiate yourself. Whether it's like understanding stocks, building models, writing reports on companies, other skill sets that maybe other people don't have. I think it's something where you have to continue to kind of build and differentiate yourself. And that's something where I don't care what school, where you're from, how tall you are. I think the reality is like in this world, it's a flat world. Information flows easy, and there's so much access at the fingertips. But I think it's also about those showing like cars have 5 gears. Okay, so but it's like it's showing like the fifth gear, right? Like
Yeah.
too many people I meet, it's like third gear. And the thing is like you need to show the fifth gear in one way or another, because I think that's something that, like, when you're thinking like internships and super days and jobs, that's what stands out.
I think that's excellent advice, and thanks for saying that. Moving on from that, you were mentioned as the best dressed by the New York Post. Where do you take inspiration from your clothing line?
Yeah, I've always look, I love colors. It's always and that's always like I've always put a lot of colors into how I've dressed, whether it's from a work perspective or even personal. And I think it's something where like you gotta dress to just what makes you comfortable. And
Hmm.
that's what always made me comfortable. And and actually it's very similar like how I call stocks, right? Like I'm not wearing the Peter Millar suit, this or that,
Right.
like, like and you're not gonna find in the spreadsheet. So I take inspiration. I travel, globally, so I'm always able to pick up different sort of, funky, shirts, hats, stuff like that. But look, I think it's all you could be of a different drum, and look, and I think that's you make it fun too, right? It's like I think that's always how I've kind of gone about it.
Excellent. All right, and before we really wrap here, what advice would you give, just broadly, words of wisdom, first for students, but really for anyone who's watching our show that's interested in the markets? How do you, stay relevant? Obviously, some of the things you've called so many great,
Mm.
calls, or made so many great calls, rather. What advice can you give to all of us, including me, on how to find those things?
I think first off, it's like being dialed in and being ready for when that moment happens. Like when you have the informational interview for 10 minutes and and that person say, okay, well, what stock do you like? And then like, you know, you basically don't have any, or you basically say, I like Amazon because I really think that they sell a lot of, e-commerce things. So I think part of it is just like be ready for the moment, but have your own style. It's like what different, are you a value investor? Are you growth? Like what names are you focused on? Like, why do you want to be in this? Whether it's banking, sales and training, research, whatever it may be. And I think more and more, it's making sure that you have a passion for what you want to do. The goal is not to be in a job where 60 minutes comes on Sunday night and you get the gut feel in your stomach and you're like
Right.
Monday morning starting. The goal is like you want to do something that you enjoy. You don't focus on just like money, prestige, because those things go up and down really quick. But I think it's really just having the passion for it and not just doing it because you're just doing it. It's doing it because you want to do it.
Excellent. Well, I think that's a great place to stop here. And I just want to say my gratitude to you for being on our podcast and spending the day here at GW. You're also speaking at our conference today as our keynote speaker. So we're super thrilled for that. And that's a huge benefit to our community. So thank you for doing that.
No, and thank you for inviting me. And I'm just like so excited to be here. And like, it's just impressive everything like you and your team have done. And, in terms of this university, really differentiating it in terms of just that edge. And I think that's something I'm just happy to be a part of today.
Well, thank you, Mr. Ives. And again, I want to say a special shout out, in addition to you, to Mr. Greg Wong and Mr. Russ Ramsey, who helped, Greg in particular, who helped put this together, and Russ, who helped put together, obviously, FBR long ago, lightning in a bottle, many years ago. But certainly the number of people that have come out of FBR is impressive.
It's like a hall of fame for Wall Street.
Exactly. So including you. And again, our gratitude to you, Mr. Ives, for being here. Thank you very much. That's a wrap for this episode of Market News with Rodney Lake. See you back on the next episode. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.